The stock market has just recently pulled back off its highs, and this gives us a great buying opportunity to pick up some big name stocks at a discounted price. And so that leads me to go over our top 5 stocks for the month of March 2025. Let's start it off with a big one, Palantir Technologies, ticker symbol PLTR. Palantir is one of my favorites. This stock was $35 just a year ago, and in the past year it has rose to $125 per share, but has recently pulled back off highs down to below $90. Now looking ahead for Palantir, there's a lot of upside potential. In the short term, we are getting some scares though because of the potential reduction in the Pentagon's budget over the next 5 years, and the CEO Alex Karp just announced that he's going to be selling more than $1.2 billion worth of stock. But hey, taking profits is never a bad thing. So with that being said, this recent pullback is a short-term pullback with a great opportunity to buy for the long term. Looking at Palantir, we have an average price target of $93, a low-end price target of $35, and a high-end price target of up to $141. So we have quite a range of price targets from many different analysts. But looking at the stock, there's a lot of opportunities for this one to bounce around this $80 area, and that's why for the month of March, this is a great buying opportunity. This $80 area is a great area of what used to be resistance multiple times. We finally broke through, and now we're coming back down to test this area, which is now considered support if it can hold. And if that's the case, I'm loading up in shares this week on Palantir. This $80 to $85 range, even closer to $90, is a great opportunity in the short term to buy into some shares as we see a bounce off this $80 price point. The next area I do want to watch out for a potential hold would be closer to this $65 to $70 area, which we've seen before in the past. So that's also something to consider. But the odds that the stock market bounces this week, at least Monday or Tuesday, is extremely high. We had such a big sell-off last week with names dropping 8 to 10% in one day. So with Palantir on my top stock watch list, I think that Palantir is a great opportunity to bounce off this $80 to $85 level, and throughout the month of March is going to start to see another push back to the higher side for this stock. And like I said, we're looking at a year-end price target of up to $150 to $160. So there's a lot of opportunity to see this one to continue running in the future. My next stock on the list is Netflix. Netflix is a stock that not many people are talking about as of recent, but it has pulled back quite a bit off its highs. $1,064 was its all-time high price point. It has pulled back to now $980 per share. It's under $1,000. Now, $1,000 is a key price point for a lot of stocks. You take a look at some of our other big names out there like Nvidia and Tesla and a lot of other big name stocks like Google that have recently done splits in the past couple years when the stock price gets above $1,000. Now, taking a look at the history of Netflix stock splits, you can see that the first one happened in 2004 for a 2-for-1. And then just about a decade later in 2015, we had a 7-for-1 stock split. Now a decade later from 2015 would be 2025, looking at a price point of above $1,000 and our upcoming earnings in April. Now there's no guarantee there's going to be a stock split, but there's a very high chance, in my personal opinion, and just based on what we've kind of seen and read on the internet, that there's a possibility that we see a stock split this year. Netflix would grow exponentially from a stock split. The stock itself would rally and continue to move higher to $1,300, $1,400, $1,500. So loading up into shares now below $1,000 is a great opportunity if you're looking to get in before they announce that stock split. Because when a stock split happens, a stock tends to bounce and run for several weeks before the stock split actually occurs. And then when a stock split happens, that one share that you have at $1,000 turns into however many shares at a cheaper price point when they do the stock split. So if they were to do $1,000, you have one share and they do a 5-for-1 stock split, you're looking at 5 shares now at around a $200 price point. So they take the shares and they divide them. It doesn't change the valuation of the company at all, but it does tend to push stocks higher. We've seen it happen with Tesla. We've seen it happen with Nvidia and many other big names after a stock split. So let's keep that in mind kind of moving forward. I really like Netflix. I think that right now is a great pullback opportunity. We've seen how this stock pulls back and rallies, pulls back and rallies and pulls back. So it tends to do this rally and pull back setup that gives us great opportunity to continue moving forward and continue to hit higher highs. So with this one being around that $1,000 area, even below, I think you're getting at a pretty good price point for this stock and what you're getting with Netflix. Now, one that is really not talked about right now is the fact that Tesla is down from $488 per share down all the way to below $300. This is an insane pullback off a big name company. We had a little bit of a bounce on Friday where we hit 270 area and bounced back up to 290. And I know that Tesla is one of those companies that just tend to move really aggressively to the upside and pull back and flush to the downside off of any type of news. But with that being said, this is a prime opportunity right now with Tesla. At least in the short term, for the next several weeks, you're going to see a massive bounce potentially off this area. We just saw a nice bounce off the support around 270 where we hit on Friday. And that leads me to believe right there that if we can hold this 270 to 275 area right here, this is a prime example where we saw resistance get knocked to the downside, resistance knocked to the downside, resistance again, downside. We broke through that resistance. Now we're testing it as support. So in a technical level, this is a great 275 to 280 area if we can hold that on Tesla. If we could break back above $300, that is the key to moving back up to the upside. Along with this red SMA line right here, as you can see, we gotta be able to trade above that because that shows that we're in an overall direction. But taking a look at Tesla, it has recently pulled back because of slowing sales growth in Europe and increased competition in China. And obviously there's a lot of political background going on with Elon Musk and Trump right now. So that has something to do with it, along with tariffs and whatnot. So there's a lot of negative factors in the short term with Tesla that have pushed this thing down. But the fact of the matter is Tesla is still a large growing company that at the end of the day is still reporting decent numbers, at least here in the United States and many other countries. So with that being said, yes, they may see a little bit of a growth slowing down in Europe. Fact of the matter is the stock itself pulled back extremely hard to the downside and is going to see some type of bounce. I'm looking at least by the end of March, another bounce back up to this $360 to $380 price point, potentially even getting closer to $400. And looking at price targets for Tesla, they are all over the place, as we have low-end price targets all the way down to $120, an average price target of $350, which I'm kind of looking at right now, and then that high-end price target of $550 to $5 plus. So there's a lot of opportunities with Tesla to the upside. Let's just be mindful as to where we are right now, watch that support resistance level, and see if we can break it back above $300. My next stock on the list is NVIDIA, ticker symbol NVDA. It's no question at all. NVIDIA right now is at a great price point for the long term if you're looking to get in. And that's my personal opinion on this one. That's what we're looking at for the month of March. You gotta be able to watch out for NVIDIA around this $120 to $125 range. This is a great bouncing opportunity in the short term, but also in the long term to finally add some shares. We're looking at price targets of this one up to $160 to $180 per share, which is giving us a great opportunity right now as a buy the dip if you're looking for the long term. And if I pull up the price targets here, you can see we have low end price targets at 135, which we're currently trading below. We have average of 178 price target, which is that range that I was giving you guys. And then the high end price target is up to $220 plus. This is still a very, very bullish, heavy stock with a lot of negativity in the short term right now. And obviously you have AI China scares with DeepSeek and tariffs and whatnot. But in the short term, this pullback can be a great buying opportunity for the long term. We got to be able to break above 140 to see any real good momentum going in this one, because we kind of been trading inside this channel sideways. So until then, I don't see a strong move to the upside. But if we can pick up some shares down here on 115, 120, 125, that gives us a great buying opportunity for the long term to make some money. And for the month of March, this is a great buy-in price for NVIDIA. My next stock on the list is Sprouts Farmers Market, ticker symbol SFM. Maybe a stock you haven't heard of, but taking a look at the stock, this was a name that was $60 just about a year ago and has run all the way up to $180 per share. Has recently pulled back to below 150, and I think it's a strong moving stock. It's been in an overall uptrending direction, and it has recently reported earnings that pulled the stock back. It reported 79 cents per share earnings per share, but still reported quarter four revenue up 17.5%. The problem with earnings was that the shares dropped due to high valuations, highlighting the risk of overpaying for even high quality companies in this type of market. basically saying that they still reported pretty solid earnings, but the fact of the matter is that the stock price itself may be a little hot. And it was at 180. Now we're looking at back at 150 right now. So we've had a $30 to $40 cut in price right now. And if we can get maybe even a little bit closer down to this 130 to 140 area, this is a prime buy for the month of March. This is a great opportunity to pick up some shares before you go for the long term. This is a company that right now has around 400 locations and is looking to open up close to 1,200 by the start of next year. So a lot of opportunities for growth for the stock, and not only that, the actual company itself. So let's keep SFM Sprouts Markets on our watch list for the month of March. And look, I can't leave you guys just hanging with 5 stocks. I'm going to give you 2 bonus stocks. First stock is PepsiCo, ticker symbol PEP. This is a great dividend play. I shouted it out last month at a great buy opportunity around this 145 area. Here we are now bouncing back up above 150. This is a great long-term name that if you want a stock that pays great dividends and is a solid long-term performer, has been kind of choppy over the past year, but leading up to this price point, you're looking at a stock that's paying $1.35 per share on dividend. And on top of that is a slow moving but solid name for the long term. PepsiCo, you can't go wrong with PepsiCo, playing off of the earnings, playing off of the long term, and with the dividend. It's a solid choice in my opinion. And one more stock to give you guys, Disney, ticker symbol DIS. This is another one that has been lagging in the market for such a long time, holding around this $80 price point for the longest time. But it's finally started to gain some momentum, and we got to be able to watch this thing back above $125 per share before we start to see a really big bounce. But I think we're finally getting to that momentum, and this is going to be a big year with a lot of big name movies being released. Disney's also pushing their streaming service and competing with Netflix. And on top of that, I think Disney is a staple name that if you want to get into this environment, this is a name you want to hold on to. There's not many big name stocks and companies out there like Disney. So you got to be able to diversify your portfolio, get away from those big AI names all the time, and start getting into a company like Disney for the long term at a price point of around $110 to $115 per share. You're looking at a great stock for the long term that's reporting about now 50 cents per share with dividends. So it's a great name in my opinion. Guys, let me know what you think about these stocks down in the comments below. These are my top 5, well, maybe 7 stocks for the month of March. If you guys have any questions, comments, or concerns, drop them down below in the comments. Leave a like, subscribe, and I'll see you guys in the next video.